Absolutely. Good afternoon, Yen. Thanks for the quick intro. Happy to be here. My name is Olli. I've been with QPR about 4 years now. Okay, I'll do the presentation at the same time, so I'll show my screen. 4 years at QPR doing process mining, all kinds of matters, projects. Today I'm to discuss accounts payable, especially the finance side of the purchasing process. Very happy to be here and discussing the points with Yen and all of you. So anytime you feel like asking something or having a question on your mind, don't hesitate to ask directly and shoot it in the question box, and Yen or myself, we will pick it up from there and try to respond to our best knowledge. I've got here the webinar agenda. So these quick introductions over here, then we will go directly to the topic of accounts payable process, the typical process variants over there, but also the as-is process. That will be followed with these process mining topics, a huge list of business benefits to be discussed. And then we naturally have a demo there on the product side to demonstrate these capabilities. And then we sum it up all in all and have a formal Q&A session in the end. So the rest of time will be spent there, but we will pick some questions also meanwhile the discussion. Very good. I don't see any questions coming in, so I will go forward with the accounts payable process. And now I will focus first of all the indirect purchasing side of it. So let's call it something, no raw materials, but pencils, consultancy, maintenance for the plants, etc. Anything that is not direct purchasing. What is a typical process variant and execution for that one? What are the different organizational units? I've got here business, purchasing, and finance lined up. And it typically comes with the purchase requisition from the finance side with followed approvals, all those steps required raising the purchase order. Once there's a purchase order, obviously purchasing department is responsible of that and will do all the required potential changes over there for the vendor information or material master and so on. Then there is in parallel perhaps the goods received for those either materials or the goods and services basically. And then there's the invoice received typically by the finance department. Then there's the validation of that invoice, whether it's a correct, so there's a PO matching perhaps in place, automated system checking the quantities of the goods received, PO and invoice, and validating whether it can be paid immediately. And there's the invoice payment. Obviously, it's not this simple always that, for example, goods received, it's by the business often, and it might be lacking, it might be partial. There are multiple points that actually are coming up once the finance is tackling the matter and the invoice is received and the investigations of those matters that have been happening in the process before this are being discussed and opened. And what are these different colors on the boxes? They're actually a little bit systems. I tried to have a look here that there are often some shopping cart systems, Ariba, something that you raise those requirements, purchase requisitions over there and approval flow. Then perhaps there's a ERP backbone, SAP, Oracle, such where you have the POs and the goods receipts. And then there is a invoice management system that's been more buzzword to basically book the incoming invoice, doing the OCR or something, optical character recognition from paper invoice to electronic format or invoicing. So it's quite a puzzle if we think about the accounts payable end to end and all these activities that take place before the actual payables and these payments. Very well. This is just the indirect side. I want to address also the direct side. So now we're talking about those raw materials to be consumed directly. There, the requirements are often basically coming from the business or actually from the shop floor, that there's a material resource planning or MRPs, etc., running and automatically raising those POs for the purchasing. So basically, it's their work to approve those, maintain the frame agreements and the prices for the agreed vendors, and manage the PO side over there. Then the goods receipts are not done by the business, but the warehouse. So you have your warehouses, incoming warehouse entrances, and there's someone to book the pieces and quantities of the raw materials. And then the finance is receiving the invoice, checking once again the invoice validity. Hopefully it goes through without any challenges over there. So then there's a goods receipt in place, PO in place, and the material data is matching. It's very often that there's a challenge of organization having the material master data different to vendor, and then it's difficult doing the matching over here and someone to do a bit of manual work before the invoice payment. Definitely these systems are not always like this. It can be that there are different systems in place or only one system to follow up end to end. From process mining perspective, it doesn't make any ruling or change over there. We can manage either data from one single system or various systems in a row. Okay, well, if this would be the really the perfect world, only two simple variants and two different operational ways, direct, indirect. In reality, what is really popular, purchasing without the PO, or there's just late PO coming in. I don't see this as a wanted way of operations in many places, but it still happens. So actually what happens is in finance department, having the first entry of this process, actually that the purchase has been made outside of a system and the invoice is received by the finance. Hopefully there is some sort of reference to a person or some occasion or yet another PO in some different context, but there is no PO in place. It's just the vendor invoice received and something for the finance to validate whether it can be paid or not. So there's always a huge discussion between the departments and people or their business reaching for the business purchasing. What is this one? Shall we pay them? And potentially raising these POs, as we call it then late PO, that to be able to process the invoice, there is a PO being raised, and it can be also done by the business, obviously, and then paid afterwards. There's the goods received needed by the business or the warehouse, invoice approvals, PO approvals, and just after that, the invoice can be paid. I would say PO penetration rate, that's a KPI that we will discuss later today together and with the QPR tool. It wraps this whole topic pretty well, that you can promote your organization's PO penetration rate, try to mitigate and minimize these kind of operations that you have just invoices coming in and all the hassle starts from there and basically backwards doing the process, and the compliance is definitely not maximized over here. So this is, and also the invoice validity over there to fulfill the full picture. But these are different variations, ways of operations. How is it in reality? It's always like this. So we can draw one design, two designs, 5 designs, but eventually when we do the process mining model, we end up with this spaghetti picture. You can see there are tons of variants, the accepted ways of operation, but also deviations that take a numerous rework or hassle there that's not definitely needed or wanted by the value add point of view. And this is the room for improvement, BPI, business process improvement, but also challenging from automation point of view. That the more there are different ways, the basically less high volume variants you've got for automation. Either it's a workflow or bots. And obviously you can restrict your systems to avoid some scenarios happening at all. Actually, I could now jump on the tool to quickly show you that one. So I will go to QPR tool, opening a demo access, opening accounts payable model, and going to discovery. This is the identical place that I took the print screen. We've got here a flow chart that's really interactive. You can play with different activities, add some more to see some price changes, stock transfers, approvals, releases, manual postings, etc. What's really beautiful to me, I've got now basically the full operations, including direct, indirect, with PO, without PO, they are all together here. So to some extent, the spaghetti is acceptable, but there's so much of non-acceptable matters. So you can have a look on the case attributes with me. There are different accounts payable document types. First of all, this is SAP data. So on SAP, you have by default two types of accounts payables, RE and KR. And these are corresponding for the ones that you have a PO happening, and these don't really have a PO. So now that I would select something from the process, for instance, the PO item created, those 16,000 cases that have this one, I'm pretty sure they will mainly fall into this category. Let's have a look. Yes, that was something I was imagining. So that from all the cases, I'm now looking at only the operations with the PO, and actually they actually come with this specific AP type, RE PO purchasing. I'll move this one a little bit. And the other activities are updated. So then the PO approval rate is jumping there a little bit, and the latter part of the process is totally changed to something that we would have without the PO. So we have first these purchase requisitions happening, then POs, then we have the invoices coming in, the OCR stuff, VIM side over here, vendor invoice management, and finally the AP document is created and it's something ready for payables. And then it's paid just before the due date, hopefully not late. So there's the clearing happening right next to due date. This is how to check. We can also check the other variant of not having the PO. So let's go to the filters. Instead of including these cases based on this one, I will exclude it. There we go. And we have is it about 6,000 records? Yeah, 6,300 that actually now start from the end, just like on my PowerPoint deck. So we can see that you are starting with the vendor creating the invoice, perhaps on Monday, and then 4 days later, on average, you receive the invoice and it's booked to your vendor invoice management system. Then there's this hassle starting with manual postings, discussing with business approvals, and then you have the AP document created and you move further. So it's really beautiful to me that from this spaghetti, you can identify those different operational ways of doing the purchasing and then start doing the deep dive and analyzing the different cases. Perhaps looking at different countries you have there on your operations, company goes doing, checking the process, for instance, in Sweden, that, oh, how are their KPIs? How is the process working? Are there perhaps some best practices that we follow up with and replicate in some perhaps bigger regions or bigger company goes? Or vice versa, looking at some deviations in either and reflecting from here. This is the typical, how should I call it, free flow analysis or something that you go with the process discovery, you amaze yourself and the rest of your organization with the actual process, all those variants, exploding the spaghetti, even with this world just that you want to see these variations and analyzing those. There's huge stack of out-of-the-box analyses coming up with QPR. You do filters, you build those and save those. That's very valuable and interesting. What I'm going to discuss next on the PowerPoint side is the business benefits. That what typically our customers gain from this exercise, what are the different views, what are the typical analyses they would love to do to get most of it in the least time. So basically time to value, so within the analytics side, how it can be minimized. In that use case, we have this template gallery within the QPR accounts payable application. So there are, yeah, this is just a sample of that. So over 10, maybe 20 dashboards already here to analyze the most typical and frequent KPIs associated with accounts payable. And you just click on those and go forward with the business benefits, deployment of those for your organization, and making sure that you actually retrieve the benefit from the targeted process improvement or initiative. Okay, but before we go through those different templates, dashboards, have a look. I will go quickly back to the PowerPoint side and discuss some typical business benefits with you. So what is this process mining specifically to accounts payable? What have I seen over there? First of all, utilizing cash discounts. Why should we do this? For me, it's quite a no-brainer that suppliers are providing organizations a payment term, such as over here, that there's a 60 days net, there's a 100K invoice coming in, you can pay 100,000 euros within the 60 days time period. Or then you can pay it with only 99,000, so 1% discount within the 30 days. Or you can try to utilize the most of the cash discount by paying it within the 15 days from the invoice date, and you will receive a 3% discount from the total value. So obviously there are two levels on this one. First of all, you need to negotiate these terms with your vendors and suppliers. So it's a great matter, a lot of work over there to have the nice payment terms in place. So that your organization is basically offered for those cash discounts. But then the second layer of utilizing those and checking that how many percentage of the available cash discounts you are retrieving, and if not full 100%, why not? Where could you improve? What are the low-hanging fruits? That, what does the QPR dashboards propose you? That where should you focus most? Perhaps is it the goods received missing, and therefore your organization is not capable of processing the invoice in 15 days, but it's taking 25, and you cannot pay with a 3% discount, or perhaps there's a wrong payment term within the frame agreement, or something that it's not maintained the data correctly. But this is very valuable, straightforward, immediate business benefits coming up. And these are actually repeating, so these are annual business benefits. So not just you once fix it and then you retrieve one-time business benefit, but it's continuation and year-to-year business benefit that you can monitor with the QPR dashboards. Another one, duplicate payments. This is something that you definitely want to mitigate and minimize. That, well, it feels silly that you would pay the similar invoice twice, but it starts to happen when you have huge operations, thousands of invoices coming in daily basis. The management of those, it starts to build up. And then there's always the chance that all those mitigation and compliance rules in place, there's chance of doing a duplicate payment. It's naturally monetary value on it, but then also, of course, the rework and effort to somehow trying to cancel that negotiation with the vendor, checking the different payments with the bank statements and going all that through to mitigate that chance. We have these QPR dashboards to on the time monitor the status, what sort of invoices there are, and the payments of those. Very nice one. I really like it. Automation, it's a big topic in any process, I would say, not just accounts payable, but in any. But this is obviously that some certain finance activities you want to minimize the manual effort where it's not needed, because there are some really labor sensitive topics in, if for instance the three-way matching is not working perfectly, there are some really frequent challenges to that invoice being, some certain invoices being blocked. For instance, that you frequently lack goods received in certain material category, or you don't have the PO in place, something, and there's plenty of manual efforts needed. If you would have the process in place, it would be a mature, nice process. You could automate it with RPA or these workflows and different APIs available, and maximize the utilization of your employment and staff. So these resources can be focused on the value-adding topics. PO penetration rate. I already discussed this a little bit with the tool, and here you go. Minimizing maverick purchasing, so not acceptable, not compliant way of purchasing, and increasing the compliance. The reasons for obviously increasing the compliance are many-folded, that you want to mitigate those risks in the business, that there are any fraud, something in place, but also this purchasing side from commercial point of view, that you take most of those frame agreements with vendors in place and do not do single purchasing in a hurry with some really unique payment terms discussed on the phone with the vendor and causing huge trouble, the finance and all the other departments in place, putting that end-to-end purchase in place and driving the usage of POs, obviously. Invoice processing times, I would say that this pretty much wraps these different topics and example benefits over here, so that you have the agile and mature accounts payable process. These different business improvement topics starts to work, and they really make the effect you expect. So less deviations and actually also variations. But if you negotiate with the vendor those brilliant cash discount terms, what if your organization maturity on the process side, it's not mature enough to process and pay those on time, so you won't actually save a penny on that one. Therefore, I think this wraps the full picture quite well. And now I would like to show those on the QPR side. So we will jump to the application, basically beginning where we were left earlier, and start doing a bit of dashboarding and accounts payable analysis. Here we go. And we are in the process discovery view, but I will jump to the application and open you the operations overview. It's building the AP overview, how many items you have in place, what's the total value of those, providing you a slicer by any attribute. Perhaps you want to check your biggest vendors, you just click on that one and the program is showing you the Copeland & Sons Incorporation being the top #1 in PCs. Different company codes. UK takes about half of the AP volume, the invoice document volume. Then there's followed with Germany, France, Sweden, and so on. This is the total volume sliced over time. You see how stagnant. This is data dump, so not frequently updated, but just a data dump, and you can see that therefore it's skewed a little bit. But this is beautiful that you can choose, for example, the period you would like to, just from here that, yeah, maybe I want 1 year about, and that's it. I do a drag and drop over there, and all the other charts are updated. Let's confirm the filter. You can see it there on the top header. It seems that over this period of 12 months, this is pretty similar. We actually chose 93% of the full data model, 21,000 records. These are the vendors over there. What if I wanted to see this top number 1 vendor? How and which company codes is this vendor providing goods, and how is their volume of time? Obviously, I can just click on that one. It will generate another filter on top of that. So we have both the time period of 1 year selected and now this specific vendor. If I confirm it, we can see that, yeah, there's that 1055 AP items available, standing with the total value around 9 million. They are all from UK apart from one purchase. So I see that this demo company code Germany have made one purchase out of this company, but other than that, it's been UK operating. Order volume pretty stagnant month to month, so not huge jumps over there. Then there are several other KPIs. There's PO penetration rate, for instance. We can see that it's jumping somewhere the red line between 70 and 90%. It's 94, I would say, over there, peaking a little bit. I have another dashboard that will break down this PO penetration rate. So now that on this dashboard, I have an overview, I can quickly check whichever KPI I would like to. And then these other dashboards are bringing me a deep dive analytics. For example, for that KPI, I'll go over here, the PO penetration rate one, that will go through that from all the other dimensions. Some automation rates of account documents, AP documents created, some lead times. What is the lead time from invoice received to AP document created within that vendor, obviously. So different organizations delivering that insight. Perhaps there's a rework. There isn't too much of rework within this vendor for what I can see. That it's really rare that there's a rework in place. However, if we would to take this vendor filter away, I'm sure there are other cases, yes, where there's more rework happening and it's taking lengthier and more time from that invoice received to the AP document being created. So you can see that that's 10 days on average while there's some rework, and it's 9 days whilst there's not. So by average, even there's 1 day wasted by those rework activities. And those rework activities are listed over here. Let's have a look. There are payment blocks in place, and those needed to deactivate. Net price changes, volume changes on the PO level, and so on. I think those are the ones chosen on this demo model. You can imagine that from operations point of view, there are dozens and dozens of different types of rework and different items you can edit on the PO, and we can trace all of those and have labeled as a rework, as you can always see over here. By the way, it's interesting that this organization, UK, Great Britain, they have a fairly good lead time between those two steps. However, there are multiple France, Sweden that could do much better. and then I see a data issues already, organizational info missing, not a really good sign from data governance point of view, but highly valid and important finding as such. Okay, if this dashboard was to provide you the overview, understanding of that spaghetti with a quick glance, providing you the capability of creating filters and actively having a look, what are these rest of the dashboards? I actually recommend that we start with the PO penetration, something I explained earlier and mentioned that it's a nice one to wrap the full finance operations and the potential challenge that there's no PO created by the purchasing and causing a trouble for the finance side. Let's have a look how that one looks. So I'm jumping from the operations to the PO penetration rate, and we are loading some new graphics. We can see that, okay, we have 22,000 APs in place, and 16 of those, they have a PO match. So that's almost 3/4 of the business volume, 72% of the accounts payable documents have the PO match. PO matches come all together with 160 million on contrast to 220 million of total business volume and invoices standing out. You see the trend over here. This is actually pretty similar to the one that we have in the operational overview. So there's a time trend and the penetration. Over there, we didn't go further that what's explaining that. Is there some sort of operations that could explain that? Therefore, we have here this table that perhaps is creating you already some insightful finding that what is the company code processing the accounts payable document. So from these 6 different organizations, we can see that the PO penetration rate is fairly static. It's ranging from 70% to 75%, but already showing a small pattern. With some projects we have delivered, it's really insightful and interesting to see that there is one of the top volume ones peaking with really small PO penetration volume and providing a lot of answers to the business and challenges over there. From this attribute filter, you can change the slicer that these measures of total value with the POs and the PO penetration rate itself, it can be resliced at any dimension of the data. Vendor countries, what have we here? Vendor groups, we have standard vendors, internal vendors, the potential changes of those. Let's see the vendors itself. Perhaps it's interesting that, yep, we have a lot. We could actually add a few more lines over here. Let's have top 100 vendors here. There we go. And now we start to see some changes over here that some vendors have higher and some vendors lower PO penetration rate. For example, over there are purchases over 1 million with 0% of PO penetration rate, on contrast to some else. If we sort by this one, so we see some vendors with even 100% of PO penetration rate. Now you can weight this table by pieces or value or that penetration rate itself and gain insights, or reslice the data per any other attribute. We have also this marvelous analytics called root causes. So you can do this kind of slicing and dicing yourself, or on the contrast, to ask from the calculations and the computer algorithm to deliver you analysis that why a certain case cases equal to accounts payable document did not go through the PO item created process steps. That's the phenomenon we are analyzing over here. And you see already a list of different payment terms, company codes, and such to bring you insightful percentages that how high is the rate in certain case attribute value on contrast to bigger model. So on average, though no values, no PO is about 27%, but there are some that peak way beyond that. For instance, if the payment term should be this one, it's 60%. And then there's in a way call to action table with a case ID from SAP, some items that did not have a PO. Well, potentially they have a late PO in the future because of the finance having them to create those POs later on and to be able to process those invoices. Very well. I see time is running out, so we still have a few minutes before we start to wrap and discuss, but different business benefits were discussed earlier. Maybe duplicate payments, really straightforward. If we open this one, you can actually see that the template didn't change too much. So the placing of different items are identical, and that's the idea, because we want to promote to our customers that analyzing and usage of these dashboards is as easy as possible. Now we have another KPI here with duplicate payments, only 251 records, or should I say already 251 documents, because you would like to make that zero, that you wouldn't have any duplicate payments. So it's 2.5 million euros of wasted capital over there, potentially, renegotiated with those vendors if spotted, but that's only if spotted by either side or notified by the vendor. That ratio over time and the same way of slicing the data and showing those duplicate payments rates, if there are any changes, and the root cause analytics and the table itself with those duplicate payments. So I'm sure you start to get the pattern. We have some key performance indicators here, top left corner, then a donut slicing the data, over time analytics, really nice table of slicing and dicing, and moving on. How about the cash discounts utilization? That was yet another topic. We have there over there 2 dashboards, whether those cash discounts are offered to your organization. That was the first stage, that you read and negotiate those nice payment terms in place. There's a certain offering ratio, you want to maximize that to cover as much as possible. Offering rates, different values, 1.2 million worth of those cash discounts available. Trend over time, I see actually it's reducing for some reason, so some main agreements have definitely been cancelled and must be renegotiated soonest to keep live with those business benefits. And then the second stage, you are being offered with something. Do you utilize that one? How are you doing? What is the actual payment size? Can you do that? If not, what's restricting you? So if you either take or lose those cash discounts, it's about 50-50 now. Actually, this organization is losing more than gaining utilization by different company codes, root cause analytics, and obviously a call to action table, checking those records from the backbone system, SAP or similar. Payment time, something we actually did not discuss, but early payments. I find this yet another tremendous business impact from the process mining on accounts payable. It's something that you negotiate the payment terms, you should pay as late as possible to gain most of or least of the needed working capital by your organization. However, it's really popular that you have some early payments. Actually, in Netherlands, it's 18 days ratio or the average for the early payments. There's a KPI that running over time, and you are wasting every year 300,000 of working capital, or actually much more. That's millions of working capital extra itself. This is just the cost of that. So you are expecting some profitability for all of your money in the organization. If you have extra working capital, there's a cost associated, typically the interest rate that the organization needs for yet another loan or something, capital to feed the growth. There's a certain interest rate, perhaps that's 6%, it's 7%, it's 10% for your organization, and therefore it's directly calculated over here into monetary value of extra working capital because of early payments. And similar wise, you can set some rules there. What's indication for that one? Early payments, in which areas of the operations you're doing that most? What are the root causes? So there's non-PO purchasing coming up again. So actually you do non-PO purchasing that is leading into early payments taking place. Oh, beautiful chart. So how much early you are paying those invoices, and a call to action chart with these items being paid too early. I don't know if you have any comments or questions meanwhile. I'm really happy to discuss those. Or if you didn't catch the concept over here of the extra working capital being tied by the early payments, I'm really happy to also follow up with you and discuss with your organization, with your purchasing volume, what is the typical ratio, what kind of a business benefit we could expect from there. Payment terms dashboards, very beautiful, nice one to address. Mostly the head of purchasing, that they would like to see that what is the average payment term. First of all, standing out today, it's related to DPO KPI, days payables outstanding. Related to that, what are your top 5 payment terms? What's the value going through of each? And there's a calculation that what if that average payment, for instance, from 45 days, 50 days, 60 days, that's extended to something else, that let's call it 90 days. What is the saving potential in money-wise of that extra working capital reduced? So in contrast, you would pay in 45 days. What if you're paying in 90 days? That's how much of saving potential you have in each company code. If I make it here, something outrageous from the standard point of view, but just to run the analytics, 120 days average payment term, you're gaining millions of euros over there by renegotiating these terms. And this is actually telling the unique count of payment terms, 32 of those being live and maintained within the different vendors. Perhaps that can be reduced a little bit and making it simpler for the finance department to fulfill the process, pay on time, and keep the vendors also really happy. We did discuss a couple other points like automation, conformance. Let's do a quick review on those before we start wrapping. Over here, we have event automation. So this is showing us the different activities on this process model, such as goods received, accounts payable documents, payments, equal clearings, invoice releases, P items created. I can see that this organization, they haven't got really almost any automation in place, but we can flip this on the other side, that what sort of a potential they have, and that's really big. So you can automate these some really founding and basic operations in typical business scenarios, rules, that if it's a straightforward compliant case, it's end-to-end automized and no need to do manual labor. We have an automation opportunities code here explaining the different event types, their business volume, occurrence rate, and what's the manual work ratio there. Now it's, for instance, for goods received, 97.9, meaning that 2.1% of goods receipts are doing automatically and the rest of them not really. So there's a lot of room for improvement. And these KPIs are very often wanted by the company level because of those automation solutions deployed to live by the different operations. So you start hopefully from one of the top volume company codes and move on with those that have not that large business volume, but yet something making a business impact over there. We can also look at it from case level point of view, that how many touchless orders you have, that there's a invoice coming in, or actually after PO, how many touches you need manual. In this demo company, since the automation rate is such a low, it doesn't even make sense. So this company would need to first have the automation in place and then do a deep dive with these case automation dashboards, that how they can further improve and have the manual activities per case mitigated and minimized. It's a really interesting chart that you can see how many manual events there are. The more you have, the average duration have often this tendency of being lengthier. So I am obviously really for the automation workflow, RP, etc., to keep the amount of manual work in place, and just to focus those efforts when it's really needed. You need to raise a quick PO for something next week or similar, and then those can be really handpicked from the queue and processed, contrast to doing something really on the daily basis. Lead times, we can choose any point-to-point lead time on the process mining model. With this example I've got, it's from the invoice receivable to the account payables document created. It's 9.5 days. To me, it's telling about the organization's capability of processing the documents and the maturity of the process. This is a histogram, so we can see that huge amount of cases can be processed in 1 to 3 days. However, the average is still 9 days, which means that there's huge amount of cases going beyond this chart. So that cumulative chart going just to 9% is telling me that there's a really long tail, that even in 20 days, this organization has processed 90% of those records. If we want, we can do a quick peek also beyond the edge over there to have a few more records. Let's see. Oh, actually, there's a filter, yeah, but to see the 100% of those documents. Very well. Then there's average duration, median, 19th percentile of processing time. It varies a little bit month to month. Perhaps there was a Christmas boom. We can see a small peak in the PO volume, and therefore there are challenges on the average and median times. Then there's also 9th percentile. That means that the last 10% will take even lengthier than this one, so even over 20 days to be processed. Slicing by the company codes, providing the root causes, the full package of process insights from the lead time point of view. And as I said, this can be with really ease of an effort configured for any point-to-point lead time. Just make sure that you have the needed data in the process mining model, and then you can pinpoint this analysis to drill down any times, in between and durations. Perhaps today, the last and final dashboard that I will show, it's going to be the conformance. Also, not only something from auditing point of view or compliance point of view, but the whole organizational maturity point of view regarding the accounts payable process, cooperation of finance, purchasing, business, warehousing, the full operations, showing us the conformance. And this is a ratio that all of these parties should work together to have 100% conformance, and that will mitigate the rework, extra non-value adding steps over there. I have a certain design here in place, really simple one, for example, how it should go, some invoices coming in and creating AP documents directly, no any changes, no approvals needed, just straight through processing of those. And we have this 43% conformance rate with those parameters. Obviously, I can change the design, add some more steps there, allow some level of repetition or approvals in different business parameters, and we get yet another KPI. For this KPI, you obviously can set your target to see that are you below or over your target, the ambition rate, where you're going towards, and the root cause is telling that, oh, at the moment it's our direct purchasing group failing that with really high percentage, and something to deep diver doing a selection that, hey, maybe I don't want all the PO department, but only that direct purchasing. Let's give it a go. So I do a PO purchasing group. There we go, PO purchasing group and direct selection. So instead of all the cases, instead of those 17,000 records that have been processed end-to-end by the organization, but only that are indirect, 7,800, I believe. And we have another root cause is said that, yeah, okay, within the indirect purchasing, it's actually purchasing organization Sweden now failing with a high percentage of conformance, leading into issues. So this is how the conformance works. You can drill down, make another analysis, and go deeper. Okay, Yen, any comments? How are we time-wise? What do you think about from the accounts payable world, this cooperation with process mining and these transactional data records?
Yeah, thank you, Olli. That was a very informative and passionate presentation that you just gave us. I noticed that we have some questions, so maybe we can quickly go through them now before the time runs out. You can check them from the question tab.
Okay, I'm just checking. Yes.
Yeah.
I have a small hiccup maybe with this code meeting. There's a question about the different source systems associated with the process. So yeah, as mentioned earlier, the idea is to build this data model in place, the event log. And for that, you can pick one data source, perhaps your end-to-end purchasing that's reflected on the Oracle, that's reflected on the SAP. So you replicate the timestamps from any other IT systems to that backbone system, and all you need to do is to connect over there. Perhaps you have a data lake where you can replicate the needed steps, you do the matching over there, or then you just fetch the data, do the extraction and building the data model from several systems. One should be the shopping cart, then there's the backbone, then there's the system having the invoices coming in, like 3 systems, 5 systems, depending how many operations you have, some mergers and acquisitions in the past, perhaps. So parallel systems, visualizing the full picture of accounts payable and bringing the insights from there. Yin, is there any questions you would like to raise from the questionnaires or?
Yeah, I can read some of them to you. Is it possible to have dashboards by cost center according to the type of product or service purchased? For example, consulting services, labor, assets related to accounting accounts. I think they would have to be defined as attributes to be used in the analysis process.
Exactly, and then I have here some example. Let's see, purchasing group that's just the indirect direct purchasing. Let me have a look. Do I have any material over here? Perhaps on this demo model I don't have any material, but obviously you can configure there the raw materials, consulting, any other material groups that you're purchasing, label those directly from SAP, any other backbone system, or build it on top of over here and do the filters and root causes based on those. Excellent question. Definitely.
Yep, and then we have a question about invoice before purchase order. How to check root causes in this in Process Analyzer?
Yeah, so you can do that by going to an application ready-made for that sort of a maverick purchasing and analyzing, or you can enjoy the easy usability of the tool, picking the PO item, invoice created over there. So this is vendor creating the invoice. I would like to have only those two event types visualized. That's about it. Yes, these two event types, and then I would like to check the variations. That is it always like that we have the PO and then vendor is creating that? Definitely not. However, 13,000 of the business volume, 22,000 in total, is coming from there. There are 6,000 that we have only the vendor invoice document date in place, so we don't have a PO. It's non-PO purchasing, and these are how I called late PO and maverick purchasing, that you have just the invoice document date, and 7 days and 7 hours later, the organization is creating the PO by the finance request or something similar. So this variation table from these two event types is putting it really nice visual place the question, I would say.
Okay, yeah, and then we have this very new question that just comes in. When you do a deep dive analysis, is it possible to view the raw data for the filter selection if needed?
Can you repeat that one? So doing a root cause analysis, can you
deep dive analysis. Is it possible to view the raw data for the filter selection?
Yeah, absolutely. So for instance, yeah, I'm clicking now PO item created. I'm running the root causes, so we can see that, yeah, case is going through the PO item. I would like to see the case attribute wise root causes. There's a huge list of these, and I can pin it to any singular type of attribute. For instance, those two purchasing organizations, if I want to see both contributing, not contributing information, but then I can go to the lowest level that I believe that the question for, that if I choose this direct purchasing, let's include only those, and now go to cases, we can see the SAP record with any other attribute information over there.
Thank you, Oli. I think that the time is up, and
yeah,
we
okay,
can
very good.
wrap up the presentation now.
Excellent. I will just put this one as a last slide where time flies always. So we started with different variants in the process, and we saw the spaghetti, then these business benefits discussed, cash discounts, automation, lead times, maverick, and then the QPR application is providing the time to value, time to insights reduced by remarkable amounts. And then thanks a lot for having those questions. The others we couldn't respond yet in time, so those open questions we will contact you later, and you will have the recording also.